Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday to everyone. Hope you guys got some great upcoming plans. Hopefully, the kids are enjoying their last days of summer if they're still out. I know a lot of people are starting this week and then next week. Um, Anyways, today is the 24th, and we got some pretty big news today, so we'll jump right into it. We'll start off with the durable goods orders for the month of July. So in June we actually went up 0.7%, but when you strip out, but in July, it looked like we had a forecast of a drop in 1.2%, and it actually dropped a little bit further down at 1.7%. Uh, as you'll see here, the big ticket items is what's bringing it down, and because what happens is when you strip out transportation, which was a big one, was Boeing was dropped a lot of orders, so that's what's kind of throwing this off. We get we got defense as well as transportation. When you strip that out, we get what they call the core capital goods orders. These are orders for manufacturing domestically, and as you can see, in June it was also a pretty good month at 1.6, but it even heated up in July at 1.4%. This is going to bode well for our third quarter GDP coming in. So this came in much hotter than what we anticipated, really, and it'll actually do quite well here with that. It'll give a good little boost to it. So let's kind of jump ahead here to the headline news. Stock market is up. Dow's up well over 100 so far this morning. We have several news, including the big one we've been kind of waiting for this week is the Jerome Powell speech. There's been a lot of talk about it with the tariff talk, which the tariffs were implemented yesterday, which kind of relates into that China bit here. We had the criticism with President Bush or President Trump on Jerome Powell with the rate hikes and everything, and how he thinks it's kind of unfortunately help make it more difficult for him. So the reason why, of course, President Trump is criticizing with the rate hikes, one, he doesn't want to obviously see the economy slow down, but two, the it's strengthening the dollar against the yuan, which is defeating the purpose of our tariffs. So what happens is when the dollar is that much stronger and yuan, when it drops a bit more, it almost offsets the tariffs that we're implementing. Became almost like nil. So it's almost like it doesn't even exist on there when you look at the differences in the currency exchanges right there. So it still keeps it relatively cheap. So it hurts his renegotiations with them, but of course he wants to see the economy continue doing well because it makes him look obviously much better. On the other side, according to his speech, he did kind of address it, is that uh, the Fed is still an accommodative cycle here. They're in a accommodative approach. And then this also kind of touches with what Loretta Messer from the Cleveland Fed also stated, basically that we're in a accommodative measure, or an accommodative mode. The Fed is. They are trying to wind down the great unwind, as we said, from quantitative easing. So we see the treasuries U.S. treasuries, the yields going up on the 10-year treasuries. We're seeing the as well as the mortgage-backed securities, which we're seeing interest rates, long-term rates going up. So they're trying to unwind their balance. They have built up a huge balance, which kind of artificially uh, led to much lower interest rates, and now they're trying to unload those. Now, because the stock market is doing so well, and we're not having a whole lot of people buying those, so the MBS, which mortgage-backed securities, is going down. So as the value of those come down further, because people get much more rate of return on their investment dollars on the stock market, those are coming down. Interest rates are rising as a result of that. So this is what's kind of happening in that target. So with the Fed, they've already reached pretty much their goals of full unemployment. Unemployment is very low. We've already pretty much reached the goals of inflation. We're about 2%. So if the economy still looks to be hot, and they can support these higher interest rates, they're kind of raising it beforehand, because if the economy ever turns, goes into that recession, or goes into where they need to go into a if it goes into recession or it needs to be stimulated, they have nothing up their sleeve to be able to try stimulate it when they're already in accommodative mode. So rather do it now and then work your way backwards. So for them to start accumulating, more mortgage-backed securities, these things, that's probably not going to happen. So the only thing they really have left is cutting rates. So by raising the rates while the economy is still able to support it, when it starts turning, then they can pull back a little bit. It gives them a little bit of a room and some tools in their toolbox to be able to support that. Now, for China, as we had talked about, China, their delegates and our delegates met. There was no progress made, or at least not to be seen by anybody that any progress has been made. But again, I don't think that was necessarily expected, primarily because these are much lower level people, and they were just kind of working on the parameters. So when the two presidents meet up in November, hopefully they meet up in November, there'll be a lot more headline. Now, of course, we talked about the tariffs coming into place. Yes, they're going into effect. We could hear a little bit more about that. China is, of course, targeting it, kind of matching up with it and targeting it so it doesn't hurt their own businesses. So they're doing targeted tariffs as well against U.S. goods in response to our tariffs. So hopefully they'll meet up in November. Hopefully it won't get in trade, but that's kind of being pushed out. Mostly Jerome Powell's speech is kind of what the stock market is liking on there so far. All right, so let's just see how this is playing out in the bond market. Bond market, we start off lower. The bond market, because it's basically saying, good news about inflation, it's basically brought us up to, we're up about 2 basis points currently, and we're still touching off this, floor of support, this ceiling of resistance, this Fibonacci level that's been kind of keeping a lid on mortgage-backed securities here. Also, as you can see here, we've had a few teases here. We've been waiting for this crossover, which looks like it's going to happen, and then it kind of bounces back up, kind of bounce back. So it's been kind of playing this line here. It hasn't done the crossover here yet. We are in an overbought position, so at some point, yes, it will most likely happen. Bring us down into this neutral territory where we want to be at. And on the other hand, we got the again, we got the 10-year Treasury. It's bouncing off this floor of support here. It's kind of holding here. We're still at the 2.82 level, and it's in this oversold type of position here. And as you can see, it's this line is basically even right along here. At some point, it's going to come up this way, which will raise the yields up here and raise. So rates are about the same as what we left off yesterday. So not much difference there. Otherwise, I hope you guys enjoy the rest of your day and you enjoy your weekend. We'll look forward to see you guys on Monday. But if you guys want to get other data throughout the day, just come over to Twitter. You can find me at Mike Bjork and get your full scoop of the economic calendar. All right, take care. Have a great day. Bye-bye.